7, 6, 5, 4, 3, 2, 1.
Hello, how are you doing? Welcome along to our non-farm payroll coverage for the September jobs numbers out of the Bureau Labour of Statistics. How are you doing? How has your trading week been? It's good to see you, and it's a pretty special one this month because we are sponsored by TheTrustedProp.com. So a big thank you to them for working with us during the week. We've got a fantastic giveaway to do in the live stream once the payroll numbers have been printed. So do stay with us for that, and I hope that good luck to everyone that's managed to enter. It's been a great week in markets. So hello, wherever you are in the world watching us. Good morning to you in the States. Good afternoon in Europe. And if you are in Asia, good evening to you as well. I know we have a guy that always watches our live streams in Japan. So hello to you, sir. And it's good to have your company today. Much to do as always. And it feels a bit compressed in the markets. And certainly the jobs numbers are looking compressed today because we are looking for 140,000 new jobs to be created in the month of September. That's only 2,000 away from the previous reading of 142. Nothing on the unemployment rate, though. That's expected to stay flat at 4.2%. And also the average hourly earnings as well. They are expected to stay flat in the year-on-year reading, and also the month-on-month reading for the average hourly earnings. That is expected to tick down a little bit, so a little bit of recessionary pressure there, unfortunately. So I suspect that the market, the compression in the markets, is also a factor of the fact that the numbers are so tight. But I'm going to go onto all of that in a second. Also as well, this is the giveaway, the details of the giveaway. We have 3 accounts to give away in the live stream for today. We will be doing that straight after the non-farm payroll draw as well. So that is going to be good. So good luck to everybody that is part of that. That's been sponsored by TheTrustedProp.com. So a big thank you to them. And also as well, if you are not part of our Discord community, then you definitely need to be. Head over to Discord, scan that QR code that you can see there in the on your screen, and speak to Reza, our lovely hardworking moderator who works tirelessly in Discord, always gets battered left, right and centre, but he's a good guy and he does a great job, so thank you to him. And join our Discord. That's where you hear all of the latest news and all of the latest stuff. It's always there first of all. Okay, right, let us move on and let's start talking about this non-farm payrolls, because there's quite a lot to do. The numbers are going to hit in 12 minutes time. So we're going to need to put some ideas behind what we might get today. For me, and I can only speak from my own opinion, for me, it does feel quite compressed. And I think it's also a component of the fact that the numbers are not expected to be wildly different from the August reading. So for me, what that means is it means that the non-farm payroll number is the number that I really, really want to watch, because that consensus number, that forecast of 140, that is so close to last month's number. So the market is not necessarily priced in a huge number in one of the other directions. That has not been priced in, and you'll see that in the price action when we get to the charts. So for me, the unemployment rate is not as much of a mover today, unless it really steps outside of that 4.2%, and the same with the average hourly earnings. So it's all about the actual number itself, and it's not often that we get to say that like that. So if we get a higher number, that would be a hawkish number. That would be less pressure on rates moving forward, which would then give us a hawkish reading on the data, which would be a stocks down, dollar up type play. And if we get a lower number today, that would be dovish. That would be the opposite of that. That would be more pressure for the Federal Reserve to cut rates. I mean, we've already had 50 basis points, but that would increase that theoretical pressure on the Federal Reserve, and that would be a stocks up, dollar down play. So you've got to get your head around how these things kind of work, and the volatility around these events does tend to play out quite well. Now, what we can do is we can use some of the other data that's created during the week to kind of get a sense of understanding what the jobs data is actually going to do. Now, if you look at this print from the Tuesday and Wednesday this week, we also had the JOLTS job openings. That's the job openings and labour turnover numbers. They were printed on Tuesday, and you see 8.04 million. That was much higher than previously expected and also much higher than the forecast number as well. Same with the ADP employment change as well for September. 143,000, far higher than the expected 120 or the previous 99. So what we can do is we can take the reading of that. Those are hawkish numbers, stocks down, dollar up, and we can move over to the charts and we can actually look to see how did the market react? Did that actually play out? Because we can use that as our benchmark for sort of understanding how the market might deal with today's numbers. So if I head over to the charts, I'll show you exactly what I mean by that. Bear with me 1 second. There we go. So on my chart now in front of me here, I've got the S&P 500. This is just on a 15-minute time frame. And what I've done is I've just painted roughly, and it's not on the exact candle, but it's just showing you the area where we got those JOLTS numbers. They came in hawkish. That stock's down, dollar up. So you can see on that Tuesday there, you can see the market reaction. We did push initially to the downside, so the market did play the way that it was supposed to, but then look at the way it got scooped back up again towards the end of the session. But here's the thing with that kind of data, look where the market actually closed, really close to where that print came out. So it did actually play out the way that you would expect it to, and the same with the ADP. It was just a little bit more pronounced on that hawkish data on the ADP, but look at the way that the market scooped it back up here at this level here. So that for me is a really super important line in the sand, because that's the hawkishness pushing the stocks to the downside, and then it's getting instantly scooped back up again. So if we get a very high reading in the jobs data today, then what that's going to do is it's going to put that line there, which comes in at 5,673. That for me is going to be a really important line in the sand, because we get the high number. If that's going to get scooped up again, that line should hold. Yeah, so you can start to see how you can take the previous data in the week and build yourself a framework for how the markets might potentially play out. So look at Thursday's price action here. It's super compressed, pretty much the classic inside day type structure. So we are quite compressed in the forecast, and we are quite compressed in the price action. Okay, so we'll see what's going to happen. Now, there's a bit of dovishness being priced in throughout the morning session on Globex, as you can see here. But if we are going to get a high number, that's basically going to then put a cat amongst the pigeons, and we should then start to push to the downside. Now, obviously, we've got a lot of problems in the Middle East. The price of oil is obviously spiked as well. So it could be, if today ends up being a bit of a nothing burger and nothing really changes massively on the jobs front, then what that could mean is the market then pivots back onto the attention in the Middle East for the rest of the US session. That could be where it is. So don't be too sort of like confused if the price action is not making a massive amount of sense, because if there's a shift in sentiment, if there's not much happening in non-farm payrolls, then that is probably the reason why. Let's have a look at the euro dollar as well. You'll see the similar type of thing happened on euro dollar. So we got the classic reactions. You can see dollar, a hawkish reaction, stocks up. You can see there. We got that classic reaction there from the JOLTS as the dollar started to strengthen, and then again on the ADP as well. So we've got the same reaction. So you should be looking for the same in the dollar. If the dollar is going to strengthen today, you'll see that pushing to the downside here in euro dollar. And remember, the opposite is in the opposite direction. That will be a dollar weakness. Weakness in the dollar will be euro dollar pushing to the upside. So just bear that in mind as well. Okay, so let's have a think about, look through the news wires this morning as well. And also, let's just bring that up there. Yeah, that's there. You can see it there. So hawkish, stocks down, dollar up. And then also the dovish reaction will be stocks up and dollar down. So we've seen that in the in both the euro dollar and also in the S&P 500 market. So for that jobs data, it is mirroring what we would expect. So we can certainly use that in the jobs data for today. Now, what about some of the big banks? What do they think? Well, actually, I've got some polar opposites today. Goldman Sachs said this morning that they estimate non-farm payrolls rose 165,000 in September. On net, big data indicators indicate a pace of job creation above recent payroll trends. Now, this is the important bit. We suspect August payroll data will be revised higher. So if we get a number that is close to that 140 or that original 140, and it's not too far wide, and the market doesn't pay attention to that, watch the revision. Watch the revision of the August number. That could be the thing that really does make a big difference. So yeah, just bear that in mind. On the opposite side of that, on the dovish side, we've got JP Morgan. So one of these guys is going to be right today. There's no question. 5 minutes to go. We expect non-farm payroll employment rose 125 in September, so much lower than what we are expecting. So you can see they are definitely pushing on the downside. Okay, right. So we've only got just 4 minutes to go. So a quick chance to have a chat about a couple of other things that we've got going on at FTUK. We've got a new contest starting soon. This is definitely in line with what most people are doing in the prop industry, and it's a great thing that we'll be bringing to all of our community in the next few weeks. It's nearly ready. There's a link in the description. Hit that link and it will take you to a landing page. That landing page looks like this. You can see it there in front of you. Scroll down if you want to join the queue for the contest. $5,000 in prizes to give away every single month. It's free to enter. Just stick your email in there and you get straight to the front of the queue when registration opens. And yeah, so that's going to be a good thing to join in. That's coming in hopefully in about 3 or 4 weeks time. Next as well, we've also got a new trader interview coming up in Monday or Tuesday. It's going to launch on the YouTube channel next week. And yeah, this is going to be a really interesting interview. I conducted it last week. I'm not saying too much. He's a really interesting guy. Have a quick look at this trailer.
Getting extremely passionate and honestly a little obsessed with trading. So I go off of like how the banks do. I go off of the major price points. I learned how to properly leverage all of my trades so that I'm not going to be going over and blowing my account again. And I just try to follow the trend. I mean, you know, sometimes, especially with these yen pairs, you know, they'll hit you with a surprise. Honestly, it's the simplicity of it for me, you know, because there is a lot of information that you have to know, but I mean, once you know it, you're able to understand it. And as long as you follow your principles and you always watch your leverage, you can be a successful trader.
Really, really super interesting guy. Knows an awful lot about trading, and he managed to scale an instant funding account in 9 days. Really interesting approach to risk management as well. I've been trading a long time and I've never considered this particular way of managing risk. So yeah, have a check out on the YouTube channel early next week and watch that interview. Okay, right, we've got 2 minutes to go until the non-farm payrolls are released. So what we'll do is I'll start to just slowly quieten it down, and so we can concentrate on the price action and see what's going to happen on the numbers. Let me just bring up my charts in front of me now. Okay, so we've got 4 charts in front of us here. These are all on 1 hour time frames. We'll go down to 5 minutes in a second. We've got euro dollar in the top left. We have the dollar against the yen, which has obviously been very active. New prime minister started it in Japan on the 1st of October. So that's, well, we can't discuss the yen now. Not enough time to do that. But yeah, keep a check on that dollar yen. Very volatile at the moment. Gold is in the bottom left-hand corner, as you can see down here. And then also we've got the S&P 500 in the top, in the bottom right-hand corner. So let's just get these down to 5 minute time frames. So we're looking for 140. I will get on the squawk as well. We get the details pretty quick. So as soon as I hear the number, I will read it out. All right, remember. These markets, the algos start pricing in already. So we've got dollar weakness already in euro dollar. Look at that. Expecting a low number. Right, here we go. 40 seconds to go. Just turn my volume up on my score. $30 seconds. Don't forget, if you've not got positions on, I mean, don't gamble into it, but you have not missed anything. There's always more opportunities later in the session next week. You don't need to trade it. Here we go, 20 seconds, 10 seconds. 254. Wow. Even Goldman got it wrong. Super hawkish. Look at that dollar. Wow. Now that could be the opportunity in stocks. So the stock market is not playing ball at the moment, but the dollar worked. Yeah, really, really strong. Look at the action in gold as well. It's falling off a cliff. Wow. See, that's it, you see. So this is where the forecast numbers are very, very we're so close. And when the number comes out like that and the market had not priced that in, that's where you get such a violent reaction from, you know? So, yeah. I mean, you know, it's not something that you need to trade, but this is the information you can now digest over the weekend and then think about how the market is then going to play forward into next week. So you don't necessarily need to trade non-farm payrolls itself to make a quick buck to actually gain a lot of information. But if this is day one for you, you need to be understanding what is happening in the non-farm payrolls. So it's the most important economic metric that we've got. Yeah, wow, what a great non-farm payrolls that was. See how that's going to paint out. Let me just check on the... so the unemployment kicked up a little bit, 4.2 on the unemployment. So I can't see the revisions, but no doubt I'll get across those in a second. The prior was revised up revised up a little bit. So pretty much hawkish across the board. So Goldman got it right, but they didn't get the number right, you know. So interesting stuff. That was a wild one. Most definitely. Okay, right. Now, onto the bit that everyone's been waiting for. We have got a giveaway to do now. 3 $10,000 trading accounts, 2-step evaluation accounts. These are accounts that you can use. These are funded accounts, ready to go evaluations. You're just not paying for them. And we have 3 of them to give away in conjunction with our sponsor for this non-farm payrolls, TheTrustedProp.com. You had to go onto Twitter and tweet things and all that stuff. And thank you to everyone that joined in, and really, really do appreciate your support. So good luck to everyone. The numbers have been crunched, and the users and the winners have been picked by the computer about half an hour ago. So that is ready to go. So if I hit this button now, we should be in a position to see what they all are. Okay, so good luck to everybody who entered, and here we go. So, first one. I hope we don't get complicated usernames. Giangado, that's a difficult one. 0804. Congratulations to you. You get a 10K evaluation account over the weekend sent directly to you. The second one is Lucas Ramira, 49210. Congratulations to you as well. You will be getting a 2-step evaluation account that you can trade over the weekend and into next week. And the final one is Professor CK3. So congratulations to you. Yeah, there you go. Another 3 accounts given away. Big round of applause. And thank you very much to everybody who entered. It's definitely good to get your get the support, and I mean, don't worry if you feel like you've missed out on anything. Just mean you haven't, because we have loads of these kinds of like promotions and stuff all the time. So there's lots and lots of stuff going on. Also, as well, we have a 40% discount, a massive discount on over the course of the weekend. So if you want to pick up any of our accounts, whether they're instant funded accounts, 1-step or 2-step, whatever your flavor of prop trading, you can get a huge 40% discount on all of our accounts. There's no add-ons included in that, but that is ready to go, and that will just be over the weekend. So it's going to end on Sunday at midnight Eastern Standard Time. So yes, definitely do that. High jobs numbers. Wow, what an exciting non-farm payrolls that was. Enjoy your weekend. Enjoy the rest of the session. Thank you very much for your company, and we will see you all next Friday.